Welcome to Fomo Consulting for your daily AMC stock analysis video on Saturday, July 31st. Ladies and gentlemen, we have an upcoming catalyst. We'll get into that very shortly, but as always, the apes are winning, the diamond hands are winning. Most importantly, the retail investor is winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel and I'd appreciate the support. Let's get into the video. Thank you to each and every one of you who has liked, shared, commented, and subscribed. It means the world to me. Thank you very, very much. Start with a quote. To me, there is nothing more valuable than how people feel in a movie theater about a movie. Will Smith. We are invested obviously in AMC stock, AMC the company, the movie theater business as a whole. But as much as we're invested in all of those, we're also invested in a culture that goes back many, many decades. A fantastic pastime, which is the movie theater experience, whether it's in the United States, Canada, or abroad. It is a fantastic experience, and we are certainly holding up AMC, the company, currently. Breaking news, breaking news. AMC's second quarter earnings will be announced Monday, August 9th at 5 p.m. Eastern after the market closes. This will provide likely a huge catalyst. Zacks, which is typically bullish, is expecting a loss, and they have adjusted this actually, of a loss of 91 cents per share, which is a major improvement year over year by over 83%. Revenues are expected to be 341 million, up a whopping 1,705% year over year. That's fantastic. I would not be surprised if revenue doesn't exceed that number based on concessions. Certainly ticket sales for second quarter, obviously with Godzilla vs. Kong and other titles being included, we may very well see a huge, huge catalyst. Speaking of that, as you can see, all the release dates and all of the revenues pretty much this year, the movie theater business is not dead. It is alive and well, and revenues are showing this, and AMC will be a major beneficiary of that. Let's look at the broader market. It was not very beneficial yesterday. Overall, Tesla had a great day, but the broader market S&P was down 23 points, Dow down 149, Nasdaq down 105, and Russell, which we are tied to, down 13. As you can see, a lot of selling pressure yesterday. The big tech, blue chips, all down pretty much across the board. A lot of selling pressure. Concerns around the new COVID variant, inflation, God knows what else. So we'll see how the COVID scares work out over the weekend and going into next week's trading. So there's a lot of talk these days about payment for order flow, and everybody has their opinion. I'll leave that to you. However, any of you that have been in the market, let's just say over the last 2 or 3 years or longer, probably remember the days of paying commission fees, whether you're on Fidelity or TD Ameritrade or whatever it is. $5.95, $7.95, $9.95, whatever your brokerage charge per trade to buy or sell. Those were pretty steep fees back then, especially on smaller retail trades. Took a little while to get over that. It's hard to have your cake and eat it too, right? So some of these companies like Robinhood, Webull, and others have pretty well figured a way to make zero commission trading beneficial for the retail investor. However, they're going to get paid either way, folks. I mean, that's just the truth. They're not going to do this for free, including some of the brokerages that are not part of PFOF. Overall crypto is a little down this morning. Nothing too terribly crazy. Bitcoin's actually impressive, holding over 41,000 at least at the time of this recording. Doge is tricked up just a bit, but overall nothing too terribly crazy. It seems to be holding quite strong. I know it's red, but Bitcoin had a fantastic run last night. I was kind of watching it, but overall, crypto's doing quite well recently. Quick recap of options yesterday. Obviously closed just above $37. I was a little surprised that we didn't make a stronger push towards 40, with over 21,000 contracts in at that $40 strike. But the overall heavy selling pressure in the broader market market likely had an effect with that. AMC certainly felt the effect of that. So overall, still very strong to close above at that resistance level. And again, we are 3 cents over last week. German apes felt the same effect that we did, down 4.23% or 31.50 euros. Hopefully better days are ahead going into next week, and we'll see how this plays out. IWM, as you can see, directly linked to the Russell 2000, which we are a heavy part of. IWM obviously had the same general chart that we did. Quick pump, then a pretty well a bleed down, and then kind of consolidation in the last quarter of the day or whatever. So overall, nothing too terribly crazy, but one thing I am looking at is the options chain for IWM to kind of look at the sentiment around IWM going out into the future, and you can see, unfortunately, it is overwhelmingly bearish. I'm sure this is picked up a lot due to COVID, the Delta variant, and just overall inflation. Small caps recovery plays, what have you, are probably obviously feeling the effect of all of that, and they are certainly waging their bets on the put side. So overall, AMC, as you can see, had a little run up in the morning and then kind of bled off through most of the day, found support in the afternoon, and we closed at $37.02, down $1.11, 2.91%. Had a nice little push after hours, closed green at 37.30. Overall, could have been far worse. We did find a lot of support, and as you can see, to the Russell 2000 chart, we mirrored it identically. And again, 3 cent week over week improvement. I'll take the 3 cents. Another quick review of the trading week, 5 days. 37 is a huge support for us, but we need to break 40. We approached it a couple times, could not pull it off. Leading up to earnings and shortly after, I'll show you very shortly, I believe we will do. So looking at the daily chart yet again, the alligator's just chilling. We're in somewhat of a pennant formation. Volumes have been obviously low. RSI is poised to make a big run, and the MACD is so very close to a bullish crossover. Hopefully we can pull that off next week. As you can see, a lot of the heavy selling pressure has been drying up, which is a good thing. Again, weekly chart, as you can see, it looks like we've bounced and hopefully are on a bullish uptrend. Obviously, MACD may bounce off that signal line. We may even have a couple red bars, but the RSI is certainly back into the channel on the bullish side of neutral. I believe we are poised for a big run over the next week or so, hopefully leading up to earnings or shortly after, and I'll show you that very shortly. GME had a kind of a rough day, down $3.74, closed at 161.12. GME is just suffering kind of what AMC is suffering, low volume and lack of a catalyst. And as you can see over the trading week, it's been kind of a just slow mechanical walk down in price, likely algo trading due to the low volumes. So what we're going to look at is the earnings catalyst leading up to earnings now August 9th. We're going to look at the last 4 earnings reports, how the stock reacted to that, the Ortex data and what have you. But as you can see, going back about a year on the price chart to early August of last year, let's look at the Ortex data. As you can see, August 6th was date of earnings. You had November 2nd, date of earnings, March 10th, and you had May 6th of this year. And you can see how the price action performed leading up to and shortly after the earnings reports. So this is the Ortex data. As you can see, the short interest trend, the FTD's bar share volume over that same period of time, about a year going back. So this is the price chart from August 2020. You can see the E in the middle of the screen. That is date of earnings in early August 2020. You can certainly see where the price was at its highest point and then pressed down. RSI pressed down, MACD pressed down really over the course of about a month and a half. And again, this is back in the day when it was trading again in that $5, $6 channel. You can certainly see right after earnings, you had the big price run up, at least for that time. It was a big price run up. certainly see a trend change leading up to earnings. RSI started its bullish run, and you had a shallow MACD crossover. As soon as you had the earnings report, obviously everything started moving up, and again, the earnings were actually terrible. So this is today's daily chart over the last month or so in July. You see a very, very similar trend. You see a mechanical sell-off. We all know it. We've found somewhat of a consolidation period over the last week or two. Leading up to earnings, you can certainly see the RSI has been pressed down very similarly, and the MACD has certainly looks almost identical to August of last year. We are about to begin a bullish crossover, hopefully. And again, I think that history does repeat itself. So this is the Ortex trend data. As you can see, leading up to earnings, lots of FTDs, heavy shorted. Then it started to run up right after earnings, as I just showed you. And there was some covering, it would appear, based on the trend data. But certainly a lot of FTDs, borrowed share volume, certainly picked up on the price rise. And again, looking at the actual earnings, EPS missed by almost 28% and revenue beat by 136%. And keep in mind, this was Q2 of last year, which would have encompassed basically the COVID shutdown. So let's look at the November time frame, and you can certainly see where this is when AMC was at its absolute lowest point. Bankruptcy was on the table, weeks away. Stock went down to $2. Of course, the apes jumped in shortly thereafter, but from that $7.71 high, you can certainly see where the RSI MACD was all pressed down yet again, very mechanically. Really, over the course of about 2 months, just bled it down to a low of $2.11. And then earnings came out, and there was a bullish uptick, as you can see. So again, comparing to today's daily chart over really the last 30 days, leading up to earnings, a very, very systematic, very similar pattern as you can see. Ortex trend data, same time period, November of last year. Certainly see where when the price ran up, it probably took them by surprise. Quite frankly, they are almost to their goal of getting it to bankruptcy, right? So again, you can certainly see that in earnings. Again, EPS missed by almost 21%. Revenue did beat by 34%. But again, this was a time period where bankruptcy was very, very real for AMC. So let's look at March of this year, the earnings leading up to. Again, this was after the baby squeeze back in late January. You can certainly see where the price was pressed down to the $5 level. Lots of heavy selling pressure, lots of volatility at that time. Things kind of ran up shortly thereafter to what used to be a major point of resistance to that $14 level. Right after the earnings, you can see. So again, there's a somewhat of a similar pattern. March was a little more volatile, so it didn't follow the exact pattern as the previous two earnings reports, but nonetheless, it was bullish right after that. And as you can see, how it compares to today's daily chart over the last 30 days. Not a whole heck of a lot of comparison in this. Things were just different back then, but certainly you can certainly see the uptick shortly after earnings yet again. And again, you can see the Ortex data where there was a price spike, likely some covering where it ran up to that $14 level. We've talked about that before. And again, EPS miss and revenue beat. That seems to be a pattern. So let's look at the earnings information from May of 2021. You can certainly see these were bad times, albeit really nothing going on April. I mean, it was pretty bleak. This was day. If you've been in this long, like I have and many others, I mean, a 10% day was 15 cent, right? So just not a lot going on. Volumes were very, very low, as you can see. RSI was relatively flat leading up to earnings. You can see where the MACD had selling pressure residual We were certainly not on the rise. But again, shortly after earnings, we had a MACD crossover, we had a rise in the RSI, and certainly we know how everything went shortly thereafter. So looking at today's chart, again, not a whole heck of a lot of comparison from that time period. It was just flat for about 6 weeks or so. Not a lot going on, but again, the MACD, lots of selling pressure over that 6-week time period was certainly very prevalent, and the RSI again was pretty much neutral for about 6 weeks. Ortex trend data, as you can see, they were very heavily shorting this stock during that time period. They were suppressing it, trying to get it down to zero. We were holding it up. It was a true battle during those days of attrition, and then it finally broke loose, obviously, in early June, as we all know. But yet again, you can see EPS actually slightly beat, and revenue was a 6% miss at the last earnings. So again, the earnings performance with this stock doesn't seem to determine its future or its performance, but there is a pattern, for whatever reason, of price rise right after the earnings reports. So the current short position average age is 37.02 days. There apparently was some covering within the last few days. Some of those older positions, because this has gone down as an average by about 2 days. However, the borrowed share volume has certainly picked up. As you can see, short interest continues to climb each and every day. Borrow fee, own loan utilization, all continues to rise, which is a good thing for us. Again, there are 442 total institutional buyers, 400 are long only. That did increase over the last week a pretty good bit. Shares on loan is now over 100 million. Utilization is almost 92%. I believe anything over 95 we'll be back in the realm of where we were late May, early June. 15.21% on the short interest percent of free float. And surprisingly, there were only 1.21 shares borrowed yesterday. However, according to Fintel, 5.4 are available on Fintel. So there's, I'm a little surprised with the downward selling pressure yesterday on the broader market that more shares weren't borrowed. But maybe they borrowed most of them. Who knows? Total volume, again, very, very light yesterday of 52 million. And overall, volumes were lower yesterday on the option chain as well, about 529,000. Much, much lower than our recent historical self, around 900 to a million per day. But what was traded was certainly bullish. So let's close with a quote. Wealthy people invest first and spend what's left. Broke people spend first and invest what's left. I really do hope each and every one of you get the opportunity to invest first and spend what's left, most importantly on your Lamborghini, right? Certainly not financial advice. I want to thank you all for watching. If you found the video informative and entertaining, please like, share, certainly comment, most importantly, subscribe. I hope you all have a fantastic weekend, and I hope your life is full of green candles. We'll talk to you soon.